Welcome back to the Bhaarat Wealth. It's been an action-packed week on Dalal Street. From January 10th to the 17th, we've seen the Indian markets transition from a winning streak to a sudden bout of volatility. While the bulls tried to maintain their grip early in the week, Friday brought a reality check as the Sensex snapped its three-day gaining streak. Today, we're breaking down everything: the Nifty and Sensex performance, the heavy-hitter earnings from Reliance and Infosys, and the global cues that are keeping investors on their toes. Whether you're a long-term investor or a day trader, this deep dive video will give you the edge you need for the coming week. Let's get started. Let's look at the numbers. As of Friday, January 17th, the Sensex settled at 76,639, dropping over 400 points in a single session. The Nifty 50 followed suit, ending just above the 23,200 mark. Now, if you looked at the market on Wednesday or Thursday, you would have seen green across the board. But Friday's correction wiped out those gains. Interestingly, while the big boys, the large caps, were struggling, the broader market showed resilience. The Nifty Mid-Cap 100 and Small-Cap 100 actually rose over 1% on Friday, showing that retail and domestic appetite for mid-sized companies remains robust despite the high-level volatility. Earnings season is the biggest driver right now. Infosys delivered a solid set of numbers with an 11.5% jump in net profit. What really caught the eye was their management's confidence, revising their annual sales guidance upwards for the third time this fiscal year. This usually signals a recovery in discretionary spending in the US and Europe. On the other hand, look at Wipro. They reported a decent 4.5% sequential profit growth and announced a 6 rupees dividend. However, the stock tanked nearly 6% on Friday. Why? The market was disappointed with flat revenue growth. In this market, good isn't enough. Investors are looking for exceptional growth. The heavyweight, Reliance Industries, reported its Q3 results on Friday. It was a robust performance. Profit climbed to over 18,500 crores. The standout was the O2C, oil to chemicals segment, which saw a 16% jump in EBITDA. Reliance Retail also held its own with 7% growth. Despite the general market sell-off on Friday, RIL stock surged 3% intraday, touching 1,326 rupees. It acted as a cushion for the Nifty. Analysts are now looking at a long-term target of around 1,570 rupees, provided the retail and telecom expansions continue to convert into higher margins. If Reliance and IT were the supports, banking was the anchor dragging us down this week. Axis Bank reported a modest 4% growth in profit, but the market wasn't impressed. The Nifty Private Bank and Bank Nifty indices both fell over 1 to 2%. We are seeing a trend where foreign institutional investors, FPIs, are selling Indian banking stocks to lock in profits or reallocate to other emerging markets like China or Korea, which have seen a massive rally lately. With HDFC Bank and ICICI Bank also facing selling pressure, the financial sector is currently in a, quote, wait-and-watch mode. Away from the main indices, there were some hidden gems this week. Chemical and fertilizer stocks like Gujarat Heavy Chemicals and FACT went on a tear, some rising as much as 9%. This was driven by a global spike in soda ash prices. FMCG and realty also stayed green. It seems like investors are rotating money out of, quote, expensive IT and banks and into value sectors like chemicals and metals. This sector rotation is a classic sign of a maturing bull market where people are hunting for the next breakout. Global markets are giving us mixed signals. Brent crude is creeping back toward $82, which is never great news for an oil-importing nation like India. On the flip side, China reported stronger than expected GDP growth of 5.4%, which has sparked a rally in global metal prices. This explains why Tata Steel and Hindalco have been performing well. However, the relentless selling by FIIs remains a concern. They sold over $600 million worth of equities this week alone. Until the FII selling stops, every rally in the Nifty might face a, quote, sell-on-rise mentality. So what's the game plan for next week? All eyes will be on the remaining big bank earnings, ICICI and HDFC Bank. Their results will dictate whether the Nifty can break past the 23,500 resistance or if we slide down to the 22,800 support level. Also, keep an eye on the Red Sea geopolitical situation. Any further disruptions could spike oil prices and hurt our inflation data. My advice? Keep your position sizes small and focus on stocks with strong earnings visibility. That wraps up our weekly news wrap-up. It's a tug-of-war between strong corporate earnings and expensive valuations. If you found this breakdown helpful, Don't forget to hit the like button and subscribe for our daily market shorts. Let me know in the comments. Are you buying the dip or waiting for a bigger correction? See you in the next video. Please take a moment to read the disclaimer on your screen. This video is for educational purposes only.